Good evening, all. Good evening, all. Waiting for my special guest to arrive. We're doing lives on YouTube now. This is the new time, new bat channel, we'll call it. Same time, roughly, same bat channel. Uh, as we get used to some of the technical aspects of this, so please forgive the hiccups. But we are definitely appreciative of you joining live here and doing what we need to do to make this happen. Make sure we are public. Check. That way, this is we're all working together here. Teamwork makes the dream work, as they say. Teamwork makes the dream work. Let's see. So, for those who don't know, I'm Harold Ballaston, aka Coach V, the real estate motivator. We talk about different things here on this channel. We go on real estate, entrepreneurship, majority, in the context of real estate, as they say. Um, and we're working on transitioning from what I used to do on Instagram live, and now we're doing it on YouTube. You know what I mean? And for those of you who have kids, you'll know that sometimes things happen, right? Background noises, all kind of fun stuff. Let me reach out to my special guest and see where he's at, and we'll get things started. Let's reach out to him and keep things going. Of course, you heard my son screaming and shouting earlier. This inside here. But if you have a family, you know what it is. I want to reach out and touch them.
Just the two of us?
As of right now, we're waiting for our special guest. I think he's running a little behind. Um, and we'll give him a moment. These are the beautiful things. Here he is. Here he is.
Hey Harold, how are you?
I'm blessed, brother. I thought you forgot
Can
about
you
me,
hear me
man.
okay?
I can hear you well. I can hear
Good.
you
Hey,
well.
I messed up. I used the old Zoom link and here I am now. So I apologize
No,
for
I
that.
figured. I said let me call you just to make sure.
Yeah, you're
Um,
good. I was like, oh man, I messed up and went to the wrong one. So
yeah,
yeah,
now we're live on YouTube, just so you know.
cool.
Um, so you get to be famous on YouTube, which
Good.
I'm not Mr. Beast, so don't worry about hundreds of
Hey,
millions of people seeing you. Not yet, at
that's
least.
okay. That's okay. I mean, if Mr. Beast ever did tax education, that'd be wild, right? So he'd probably just end up paying everybody's taxes at the end.
Pretty much, pretty much.
Yeah.
So currently we have one guest on the Zoom, and I'm gonna be checking YouTube to see if there's any questions coming through there. But I also had some questions from our last meeting, so that way we can
Sure.
kind of get things rolling.
Yeah,
So
for
one of
sure.
the things, one of the first things that you mentioned and that caught my attention was having separate LLCs for your flip business versus your buy and hold business. So
Mhm.
can you explain the logic behind that and why that's important?
Yeah, so one of the biggest things is realize whenever you're doing real estate investing, your income's going to fall into two categories. You're going to fall into either active, which is your flips and your wholesaling, or passive, which is your holds, which is your rentals. The flips and wholesales are subject to self-employment tax. And so a lot of times with that, you want to keep those separated out because that's like going to make up for your Medicare, your Social Security. Your passive income, your rentals are not subject to self-employment tax. So in order for me to maximize my savings, I never have those combined because I could usually save 15.2% on self-employment
Wow.
tax by having my rentals partition out that way, up to 15.2%.
Now, so that's amazing to see. This is why you and I are gonna be, we'll be working a lot
Yeah.
more closely together.
Oh yeah.
So, but let's talk about those folks who didn't know that, right?
Mhm.
How does that impact them if they've done a flip and they have holding properties, properties that they hold inside of the same LLC?
Yeah, just work with a smart CPA who could delineate it for you. Any good
Okay.
CPA is going to say, we're going to look at this not really as an LLC, but as an asset. And they'll break out
Okay.
your assets and make sure you're still capitalizing everything. So for me, like, I don't like, as running a CPA firm, I never expect clients to be perfect. So, but I expect for myself to be perfect. And so
Okay.
as long as the client is trying and we can at least say, this is money coming directly from that asset, we're usually going to be pretty good.
Wonderful, wonderful, wonderful. As a matter of fact, I'm gonna give Rita, who's on the line, if you want to ask a question, because I have dozens, so I
Yeah,
can keep us busy.
let's go, Rita. Let's go ask any questions, Rita. My name's Ryan Kaysen. In way of introduction, I've been in the real estate tax world for about 18 years. I run a firm that's processed over 200,000 returns, mainly in real estate related. So just as a background, that's sort of who we are.
Okay, good evening, Ryan. Nice to meet you.
Pleasure.
I think my first question is, so I have mostly buy and holds currently. I did a lot of repairs on one of my properties, so I believe I have a lot of losses because I just have been putting out money and I haven't rented the units yet. I'm still trying to do that.
Mhm.
But then I also took out money against one of my retirement accounts. So I'm trying to figure out if, since I am not 59 and a half quite yet, the penalties and the taxes that will be due based on the money that I took out, will those losses or the money that I've put out to do the repairs, because I heard that you made the differentiation between repairs and improvements. So these were definitely repairs to get the property up and running for rental. How will I know? I guess I won't know until I speak to an accountant.
Mhm.
If one will wipe out the other.
Cool. So what you're asking is a pretty complicated, complex question that I'm gonna unravel for you pretty easily, right?
Okay.
So my first question is, are those rentals that you have, are the buy and holds, are they placed in service? Meaning, are they available for rent?
They are available, and well,
Great.
one is the one that I've made the most investment in this year is available for rent. It's
Great.
on Zillow, it's on affordable housing. It's
Great.
they
That's what I want to hear, actually. So Rita, the thing is, a lot of times, right? Let me tell you why this rule exists. A lot of times, like some people go by their mama house and they'll say, hey, it's rental, I want all my deductions, and they never rent it. Right? The IRS ain't dumb. They caught on to that pretty quick. In your case, Rita, where you actually have the property available for rent, if you have the property, what we call they call it fair rental days, or they call it date, place, and service. If you
Mhm.
have a date, place, and service, that's good. That means you get to take the repairs against that property and offset some of that income against it.
Okay.
Now, I don't want you to build the hope that you're going to offset all the distribution that you took for retirement, not knowing that amount for you.
Mm-hmm.
The penalty could still lie there because that's usually standard because you're under 59 and a half. Just going into it. Usually, whenever you take out that money, they give you the option to have any withholdings. Most of the time, they're going to force you into it, which is good. Now, at the end of the day, if you didn't withhold, we are still going to pass through some of those repair costs, any business startup costs. You have to think if you had any costs like, let's say I go and I pay Harold a lot of money right now. I'm like, Harold, mentor me. Like, I'll just use a number, like 100 grand, right? Harold's like, I would do a lot of mentoring for that, Ryan. But let's say I give Harold 100 grand to mentor me, right? Even before my business started, if I paid Harold that, I also look at that and I deduct that too.
Mm-hmm.
You need to look at not only your repairs, but any other expenses you had to start that real estate business. They're all going to pass through to you personally, but also that income you took out of your retirement is going to pass through to you personally. So it's hard to say will it offset completely without diving into numbers for you, but just know that all does help you to answer your question. So,
Okay.
yes, ma'am. And I would suggest like we do 101s with for Harold. I mean, we've already negotiated that and we do free
Mm-hmm.
101 consults for you. I would definitely get one of those and just to see can we kind of dive into it a little bit more for you too.
Yeah, definitely, because I also want your advice in regards to I wanted to try to claim real estate professional status this year.
Mm,
Um,
okay.
done the best job of documenting everything, but I am gonna get that all together before I have to file my taxes.
For
But I
sure.
have two separate LLCs that I use. One is like for my management part, and one is for my rentals or acquisition.
And there's nothing wrong with that. There's some really cool apps too. If you are like I always say, like if you do you have a W-2 job, Rita?
Yes, I do.
Okay. So for me with the W-2 job, I like to keep track of my hours either on a calendar, like something like Calendly or something like Monday to see if I have that real estate professional status.
Mm-hmm.
Or even to go one step further, there's things out there like Reps Tracker, REPS Tracker. It's an app
Mm-hmm.
and it's built for real estate professionals. So
Okay.
the actual app's pretty easy to use, but it'll track your hours to see if you qualify and it'll let you know too. So in 2024, you might want to look at starting off your New Year's with that.
Yeah. Okay. Great. Thank you so
And,
much.
and then Rita, keep in mind also too, there's also hidden deductions that you're going to get, not hidden, but things that you don't think about. Like right now, you're like, I spent money on repairs, right? You got to remember that you're also depreciating that property. That also helps you too. So there's quite a few other deductions that you want to do. I'm also really big into doing a visual inventory at the end of the year. I get up and walk around my home office and see what all I purchased. And
Mm-hmm.
so because I never buy anything for my home office, I'm like, man, that printer's squeaking. I'm going to go buy one that I need 6 months from now and leave it in here. I never do that.
Mm-hmm.
We wait for that printer to break, then go buy one. Get up and do yourself a visual inventory of anything you bought for your business too. And
Okay.
then that will also help you get into this, like I always say, be a tax squirrel a little bit. Go gather those nuts for tax season.
Mm-hmm.
Like go start storing them up. So kind of hit that squirrel mode a little bit here the next couple of weeks for yourself.
Okay. Sounds good. Thank you.
And
Um, do I reach out to Coach V for
So
your
there's a link in my bio. I'm also gonna when I repost this video, I'll have that link inside of the description.
okay.
And if you watch the first one at the end, he had put a QR code that they created for me for my folks that come that work with me, and they said it's a very nice thank you on their behalf. I appreciate them doing this for my folks. So this and obviously I can always send it to you as well. So.
Okay. Great.
Yeah,
Thank you
read
so
it. We'll help you out. I would say now, like, just so you know, like with the beginning of the year coming, after New Year's hits, everybody's like, let me get in for a tax consult. Go ahead and book now. It'll help you out a little bit earlier.
much.
There's plenty of people who are pretty crazy with that. Like they'll wait.
Absolutely.
So but cool.
Absolutely. Because he and I are gonna be best friends next week. So
Yeah, there we go.
Well,
There we go.
are you taking any vacation time so I know whether to try to get you
You know,
before?
my staff, we're closed as an office on Christmas Day, the day after Christmas, and next Friday. My staff still has availability to do plenty of calls. They're still there to help.
Okay.
So yes, ma'am. Go ahead and book, and I have a whole staff ready and willing to help you.
Okay. Wonderful. Thank you
Yes.
again.
Oh, no problem, Rita. No problem.
So, something she brought up, that was one of my next questions. So for those who have a management entity that they've created as well, how, is there a right way to situate that, considering, so as an example, even a better example. So let's say someone buys a house hack, right? They're living in the house, but they're
Yeah.
renting out a couple of their units. They got a, 3 or 4 family, but they want to have a management entity to put through all expenses, lawn care,
Yep.
repairs, lawn, whatever it is. How would somebody, what's the kind of, again, without going too deep, because I know we have limited
Yeah.
time. What's a good way for people to think about that and set that up?
My biggest thing with always setting up a management company or a holding company and then my operating entities, so up here, is not really for my tax maximization as much, but for my asset protection.
Okay.
So my biggest thing is like, look, I'm gonna be honest with you guys. I've been running business for 20 years. You know who loves businesses? Bad clients and lawyers, right? And so you'll get it occasionally. I'll get clients sometimes. I'm like, oh, here we go. They're going to try to lawyer up about something they did. Like you see it all the time. And as a business owner, my head's always on the swivel. It creates this natural paranoia. Well, for me, I'm really big in doing the holding company and the subsidiaries because it creates an extra veil, an extra layer of protection from lawsuits. So it's like, okay, you want to try to find who owns this property? Well, it turns out I have a holding company in a state that has a lot of anonymity, like Wyoming, and good luck to find out who owns this so you can sue me. Because guys, there's plenty of people out there who will do dirty, dirty, horrible things so they could basically try to get in your pockets. And don't run your business and then let people who are doing nothing get in your pockets, right? And so for me, I'm always going to set up that holding company as a big form of asset protection. And also my managerial, like my money flows easier that way too. But mainly, um, I mean, for me, y'all, well, you're in New York. I'm always scared of those crackheads. I'm always scared of crackheads, Harold. That's my thing. So, you never know what they're capable of. So, for me, that's kind of what I worry about. It's always have everything in multiple layers of holding companies, just to say like, hey, I want to protect my assets. And it's sad that we have to do that, but for me, it's a necessity. So that's always what I
It,
preach to people is like, don't work hard so somebody can just come along and, stub a big toe and say it costs you $200,000. So that's that's
nah,
how.
that's huge.
Yeah.
That's huge. And a lot of people don't think about that. And I try to explain that to some folks, and they don't get that. I'm like, try to put everything off of your personal name as much
Oh
as you can, and then protect yourself as many different ways as possible, right? Watch what the big boys do.
yeah,
So
for real.
big boys and
And that
girls.
and that too, and also too, like me personally, I don't like for anybody to be nosy in my business affairs. Like I don't want some cousin who's I got a lot of cousins who think of dumb ideas. I don't want a cousin who's going to open up a snow cone stand in Antarctica to Google what I have going on and to hit me up for money too. So for me, I'm always trying to say like I want to be a millionaire in overalls, or I want to be like that's big things I grew up with. I don't let like don't just have all your stuff out there so people could easily come and try to even family like try to bum it, right? Like we all got that cousin,
Yeah.
right? So those are things I'm always conscious of as I kind of do more and more business is trying to protect my assets and also hide my assets. Not necessarily say I'm doing anything shady, but just to say I don't want anybody in my business who doesn't need to be there.
That's fair. That's
Yeah.
that's 100% fair. And that's something, unfortunately, a lot of people don't listen to. Um, but that's the hard lessons that sometimes people have to learn.
Yeah, but like even in those consults like we're doing right now for anybody who you're mentoring, like that's the first thing we're hitting. Like that's the first thing. Like we're gonna be like, tell us about your asset protection. Let's talk about your entity structuring. Let's go over the value of it from the beginning.
And
Because
that's something I wish I did, many, 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 many moons ago.
that's
And
same.
and just so everybody knows, Ryan and I are gonna be working to restructure a few things and tweak some stuff so that way I'm even better positioned.
Yeah, for sure.
I'm always learning something new, and this is why I'm glad to have good people around me that I can lean on to get that expertise. You know what I mean?
Yep, for sure.
So can I ask another question?
Yes, ma'am.
Please do. You here?
So in regards to this new Corporate Transparency Act that's coming up in 2024, how does the state of Wyoming and the amount of anonymity that's always been talked about, if you have something in Wyoming, how does that get impacted, if at all?
Rita, I like you. This is a good question. So, Rita, this answer to this question I'm going to answer for you has taken hours of research. So, I'm going to make this seem really simple for you, but I'm also going to tell you a little bit about this, right? So, I'm going to educate. Nobody's really putting out a lot of content on this right now. If they are putting out content on this, it's not necessarily like I was tagged today in a Facebook post. And so somebody said, hey, everybody, set up trust so you can avoid this Corporate Transparency Act. And that's completely false. So let me tell you a little bit about what this Corporate Transparency Act is and why it's set up. The Corporate Transparency Act is set up by a government agency called FinCEN, the Financial Enforcement Crimes Network. What they're basically doing is they're going in and they want to put a stop to money laundering, funding terrorism, offshore accounts, a lot of these things, right? So FinCEN is an actual government database. It's a huge government database already. So what they're saying is at the beginning of 2024, they want to have every business in America, any LLC, and any owners of those businesses go in and register in their database so they know who owns what and why. Now, will this affect your anonymity? No. If somebody gets into the FinCEN database, we got a lot more problems in the world than anonymity. That means somebody hacked the government system. Let me tell you why I'm doing it. I own about seven to eight LLCs. 6 of those I really care about. 6 of those are like babies that actually have things going on. Now, the rule is on January 1st, supposedly, they have nothing ready for this yet, but on January 1st, any new entity in 2024 will have 90 days to register in the system. It'll be a pretty easy system. You just have to report what we call your beneficial owner interest, meaning who owns what entity. Any existing entities in 2023 or before, they have 365 days. So next year, I had a friend come to me and we're starting a business. And he's like, let's set up an LLC. We can just do it in January. I was like, absolutely not, man. We're setting this up today. This is what we're doing today. And he's like, why are you in such a rush? And I said, I want the 365 days to do the Corporate Transparency Act because I don't want to be FinCEN's guinea pig at the beginning of the year if we set up. Because I'm going to wait to do mine 6 months down the road, 7 months down the road. I'm going to let them work out their kinks. And so if you're even thinking about setting up an LLC, I would go ahead and do it early. Because for me personally, I'm like, I'd rather do that and have 365 days than 90 to register. Now, the actual paperwork to register, it's not going to be too difficult. It'll be pretty easy. Most normal people with the brain can do it. You're going to see a lot of companies come out and start marketing. Hey, let us set this up for you. Don't pay anybody to do it. You could easily do it. It's pretty easy. But for me also, like I've been through 19 years now of government compliance with the IRS. And I can tell you any new system is never going to be smooth. So that's why I'm going and I'm like, we're setting this up. And this is actually earlier this week, I told my buddy, setting this up today because I don't want to deal with this in 2024 where I only have 90 days. So to answer your question, won't affect your anonymity at all, but there's also ways to play the game. So you're not a guinea pig too.
Okay, great. Thank you.
Good question. Actually, a lot of people aren't aware of this, and every accountant's waiting for every accountant and every CPA firm waiting for the government to give the real portal and what they're really doing so they can provide correct direction. Well, here we are. What is it? December 20th. And we're waiting for them to open. Like we don't really have anything yet.
Wow. Well, this is what they do, and then they put the onus. They put the onus on us to make sure we're in step.
Oh yeah, and then guess what your fine is if you don't do it correct?
It's like a few grand or something like that, right?
$500 a day.
Yeah. Oh.
So we ain't going to tell you, but you got to figure it out. Type mentality, right? So. Us here, we'll be putting out a lot of content and material on it and guiding people through it. I feel that's our moral obligation to do it. And so like for us, it's like, okay, but we're also like, I have clients who are like, man, I don't want to do an LLC yet. And I'm like, if you're going to do a business, you better do one now. Like, I'd rather just do one now and knock it out, opposed to anything else. And so that's also too, Rita, why we would normally have a little bit more time off next week. But our
Mhm.
staff is going all next week just on the LLC setups. So
Gotcha.
yeah. So that's
Yeah.
the reason we got a little bit more hours than normal. So
Okay, great, great.
yeah.
You know, a lot of people ain't taking advantages the way they should have, but it's okay. I got plenty of questions to fill us up.
No, go ahead. I'm
All
always
right,
happy
so
to talk. You can hit me with anything.
no, and we appreciate that. Appreciate that. So one of the questions I definitely want to ask is for those who want to set up things for their kids, right?
Mhm.
And let's say, let me take a step back, but that's gonna be part B of the question. So let's say I have a holding company, I own multiple properties in different LLCs. Um, from a tax perspective or an accounting perspective, is that prudent? I mean, from a protection standpoint, I know it is. From an
Yeah.
accounting standpoint, does that make it a lot more costly for me as an operator to do that from a taxable perspective, and I mean accounting perspective more so? And then how does that benefit me from a tax perspective?
So, so your accountant, this is what a lot of actually, this is like, I teach this to accountants all the time and I teach this to clients. Whenever you're in real estate, keep in mind that your expenses follow the asset, right? So you have a property at 1121 4th Street. Your expenses go to that asset. Does this help you tax wise to separate them? Absolutely. Does the LLC matter as much? Not really for tax reasons. Another thing that really comes into play though is for me, I want all my expenses to follow that asset because that's how I'm gonna get my tax benefits. So you always want your expenses to trail the asset. That's always going to be beneficial for you. It's also going to be cost effective for you. Usually nobody's going to go in and they'll charge you a little bit more per rental. Like we do that because we have to do all rentals and calculate for them. But it shouldn't be anything drastic. Nobody should say, hey, it's $3,000 per rental. If they're saying that, then leave. But usually any good accounting firm, they'll be so used to doing rentals, they'll usually help you out. Like for us, rentals don't like we do more rentals than I mean, it'd be ridiculous how many if I ever total those up. So for me, yeah, like rentals aren't too complicated. There's ways that you want to maximize every single rental and treat it almost like it's little own individual, property, which it is. And that was going to save you more money than anything else. Lazy investors will try to lump it all together, and lazy investors never win when it comes tax time.
No, good to know. Um, these are things that we're parsing out as an operation ourselves. It's just to make sure we're operating the right way, and hence I said
Yeah.
you and I are gonna be best friends. So
And traditionally, bookkeeping on multiple properties has been pretty difficult. QuickBooks is not easy. You have to go and set up what we call a class, and everybody who's listening is like, "What is this nerd talking about?" It's like pretty technical to do it in QuickBooks, but luckily there's some new softwares and programs that have been out now that actually have been built for real estate investors and rentals that make it a lot easy on your bookkeeping, a lot easier.
awesome.
So, yeah, those are things where I'm like, I'm even a big fan of, and I know how to do QuickBooks, but I use other programs where I'm like, man, this program makes it so much easier to keep track of all my rentals. And so I just use a different program to keep track of my rentals at the end of the year. So
Absolutely. Okay. No, no. That's good. Now, and then let's say an operator obviously has a trust. Let's say they're using the trust to kind of control everything. And let's say they either want to retire or God forbid, they leave the earth and they want to make sure that from a succession standpoint, everything is still kept clean for their family, right?
yeah.
And things of that nature. How does, let's say someone who passes and has it in a trust affect the tax treatment, or does it at all?
It doesn't. So I'm gonna say this kindly. Well, we just get it out. When you're holding real estate and you die, it's not a bad thing. Okay. So there's this term called basis, right? Basis is the value
Yep.
of a property. Whenever you die, and you have little kids there and they're going to get those properties, they get stepped up basis. So when you die, they get the present day value of that property, not what you purchased it for. So that's why you see all these old timers with 1031s or they're moving properties forward. They'll die with that property in their name because their kids inherit it. So if you purchase it for $100,000, you die with it worth $1 million. That kid's getting it at $1 million value. If they sell it for 1.1 million, they're only charged from $1 million to 1.1 million on their capital gains, not the $100,000 up to the 1.1 million. So death is actually beneficial, weirdly, God forbid, if somebody loses Earth in real estate. So you always have these people like who we always want to help out our parents. Like I'll do anything to help out my mom. But a lot of times you're not helping your situation or your family situation. If you're going to go in and try to take over a parent's home to help them out, just pay the mortgage for them to keep it in their name and help everybody out in the long run. So
now what happens if let's say the parents decide to put it in a trust, like they did a living trust, and now the entity is moving, the responsibility or the ownership of the trust or whatever the case is now moving to the kids, essentially. Do they still get that stepped up basis?
They do. Yeah, my biggest thing, Harold, is like, so my dad passed away a couple of years ago, and I was like, man, when my dad passes away, there's going to be there's 6 siblings. I was like, there's going to be somebody who argues over something. And, sure enough, within 2 or 3 months, it happens. So for me, we all know our kids. I have a friend who is worth multiple millions of dollars. And he gave his kids his inheritance while he was still alive so we could watch how much they squander it and also argue over it. So we all know our kids. For me, estate planning, we also offer that. Estate planning, trust, wills, those are huge things for me because you know what your kids are capable of. We also have to be realistic, but also too, like, don't let it get hung up in probate. Don't let anything like that happen. So I like trust more as like a legal standing on if I pass away. I have all this in place already.
No, understood.
Yeah, it's crazy.
I'll share a crazy story. Some people have heard this before, but if you haven't, when my father passed, he had a pending lawsuit, not against him, but someone had hit him in a vehicle. And for my mother to continue the lawsuit, she had to get power of attorney of his estate. She had to be considered the head of his estate, even from a small perspective. It took nearly 2 years to do. And we kept trying to tell our parents, like, listen, put the house in the state, get a living trust. We don't want the house. Don't worry. No one's trying to take your house. Just put it in a living trust. And, that way you protect everything and for multiple reasons. And it was not until one of the last things we had to do for his estate, I said, hey, we're right next to the probate office. Let's walk in there and ask them what would happen. God forbid something happens to you or so forth and so on. And you have a will. So the guy looked at her and said, okay, your kids will still get the house, but it has to come through our office to authenticate that is your will. And in New York State right now, we have, and this is before COVID, we have about a 6 to 8 month backlog. That was before COVID. So I can only imagine what it is today. And she said, oh, heck no.
Yeah, for sure. I'm still signing stuff for my mom to be like after 2 years, like where my mom and them's in Louisiana, and they run off a whole different legal system, right? So like for me, I told my mom the other day, I was like, hey, you need to go get estate planning. And we talked about it and she's doing it luckily, but like we also offer that estate planning as a big part of it because it kind of goes back to protecting your assets. And for me, like my boys are 7 and 4. I just turned 39 yesterday. But for me, I know
happy birthday.
Thank you. I know what shameless plug for my birthday, everybody. But I know what I know like for me, if I leave the earth, God forbid, I know what I want my kids to have in place. And so like for us, that's a big thing. Like I'm 39 and I still believe in estate planning. Just because it's such a major part. It always should be a major part of your life on it for sure.
Absolutely. All right. So so actually, as we go into 2024, right? And obviously we spoke already about the filing the information, the Information Act or whatever the heck they want. Are there any things people should be thinking about as they transition into 2024 and they prep, getting ready for their accountants? Hopefully they'll use you if they're smart. But what things they should be thinking about, especially if they were new to investing this year, whether it be a new flipper, a new buy and hold person, even somebody who may have been like on a debt deal, like they They
Yeah,
lent money to somebody.
for sure. So new people, let me tell you guys when your business starts. Your business starts when you have the intent financially for your business to start. So let's say this goes back to you again, Harold. Let's say I go out and I'm like, hey, 100 grand to teach me. And let's say I'm just learning for 6 months and then I'd finally do my first deal next year. That raises the question, do I get to write off that money I spent with you because I haven't done a deal? The answer is yes. If you could prove that your intent is to do deals, is to be in business, look, I know no real estate hobbyists. I know about 3,000 real estate investors, but I know zero hobbyists, zero. And so for me, the thing is, if you're actually going out and having that intent, yeah, you can write it off. And so keep in mind, even if you're just starting, write it off. Write it off. Deduct from the beginning. You want the IRS, like, look, they're going to give you the benefit. You might as well take it. If you're not going to take it, that's on you. But right now, that's one thing. The second thing I would do too is anybody who has a flip that they're holding. Some accountants will say, let's take those expenses in 2023, although your flip hasn't sold. Don't do that. With the flip, take all your expenses in the year that you flipped that property. So for y'all with 2023 properties you haven't sold yet, take all your expenses in 2024. Now you might say, man, that sucks. You know what really sucks? If you turn around the next year and you have 100% gain with no expenses, that really sucks. So take your expenses and your income with the flip at the same time. That's another tip. Third thing is make sure you have a good accountant who's used to things. I had a guy today earlier who I called, who somebody's on the phone with, and he's in a consult, and he's like, I don't know how your difference to TurboTax. I was like, all right, let's do this. And I was like, hey man, did you make any money this year? And he's like, yeah. And it's like, you use a truck? He's like, yeah. I was like, TurboTax asked you about that truck? He said, no. I said, all right, cool. There's one thing. Second thing, you made a lot of money. You put any money into any retirement vessels for self-employed individuals? He said, no. I said, cool. There's $100,000 that TurboTax would have left on the door for you. So keep in mind, guys, that do-it-yourself is cheaper, but we're a lot smarter than that. So my biggest thing too is make sure, like, especially if you guys have made money, make sure you're contacting, connecting, exploring with somebody who can save you money. Because I can assure you that everyone on my staff cares more about you saving money than they do a lot of things. A lot, like, I always think it's funny when somebody's like, you work for the IRS, and I'm like, yeah, all right, cool. Like, I don't work for the IRS. So you always want to make sure you get that high level help with somebody who's going to dig and kind of provide your deductions for you.
So and that's highly critical.
Yeah.
Now let me ask you this. There was a woman that was actually it's a couple, right? They retired,
Okay.
sold their house and bought another house. Had decent retirement income. Obviously they're married, so they're gonna get a big chunk of that waived, from the capital gain side. Is there anything like a couple like that should worry about, considering that they're on a set income on one side, but then now they had this major sale on the other, which there's a portion of it that's not, it's going to require capital gains. How would something like that impact their
Now we hear, like, this is a common misconception in the real estate world. People hear capital gains and they're like, oh my gosh, capital gains scares them. They think it's bad. For me, I always want capital gains. Long-term capital gains is my friend. Your individual income tax maxes out at 39.7%. Your long-term capital gains, if you held an asset for over a year, maxes out at 20%. So that's half. It's half. So for me, long-term capital gains are my friend. I once had a property and somebody's like offered me a deal on it at 11 months, and I was like, come back to me in 30 days and then we'll start this process, because I'm going to wait till it's a long-term capital gain, save my tax money. The biggest thing with long-term capital gains is you have to remember, a lot of times when we have long-term, it means we've held it a while. So we're pretty forgetful. So let's say I come in and I have my house right here. That's my personal residence. I'll give you a real example. Like, Salt Lake City's crazy. I bought my house for $275. Back in the day, the house right beside mine went for $700,000 worth of cash. Right? Let's say that thing, it's probably up to 900 now, realistically. So for me, my capital gains exclusion wouldn't apply. But what I did this past year is my upstairs, I put about 80 to 100 grand in. Now, it's for me, it's something I like. I like to cook. My kitchen's really nice. I like to entertain. My kitchen's nice. That's all in a kitchen. I'm really happy. I love the kitchen. Let's say I go and sell this house next year. I could technically go back and say, I built that kitchen to improve the value of my house and deduct some of that. So you have to look at things that you've done to increase the value of your home that haven't been deducted that can help you lower your taxable long-term capital gain. So if that couple put in new sprinklers, that's $4,000 to $5,000. Vinyl fence. Like, I don't know who pay vinyl fences are the most expensive thing on this planet that you never would think be expensive. Vinyl fence, $6,000 to $8,000. So if I go out and even do my landscaping here in Utah, a gazebo, that's $8,000. I'm up to like $16,000, $17,000 right there that I could subtract if I'm over my capital gain limitation. So those are things to keep in mind. Yeah.
Yeah, I'm sad that a lot of folks forgot about this and then they take advantage of it, but they'll catch the replay.
Hey, we'll run it back. Beginning of the year.
Oh yeah.
We want to talk about taxes. Rita's over there like, y'all keep going. This is great, right? But no, like at the beginning of the year, that's the thing. Like, and a lot of people watch the replays. We're always here to help. For me, this is like something I actually enjoy talking about. Because it's all things to really help people save money opposed to just spending money. So yeah. It seems like everywhere you go today, somebody wants you to spend money, but these are things that we can actually help you to save money on. So
absolutely. So let's do this. You actually been very valuable just for the information you gave tonight. And I think this is going to blow people's minds, especially those who are newer to the game and maybe didn't realize some of the things that they can take advantage of. Even they've been in at it 2, 3, 4, 12, 15 years, because some people don't have great accountants. I definitely we'll set something up. I just so everybody knows, Ryan and I will set something up for the earlier part of the year before tax season gets crazy for him. And we'll do another kind of Q&A, a little more information than a Q&A, part information, part Q&A, and give everybody the opportunity to really jump in. And we're gonna really promote it to the point where I'm gonna make the seats, limited per se. And really get people in there. So we'll work on that. We'll get a date and we'll start kind of putting that date out there for early, maybe late January. Maybe might be a good good timing.
For sure. I'll be trapped in the house with snowstorms anyway. Let's go.
There you go.
Just have one more.
Yes, ma'am, Rita.
It's a quick one, I hope.
Sure.
So you're the first person that I heard say, everyone is always saying get cost segregation studies done. Everyone says that. Just go get study. You heard say only do it if the property is worth more than $500,000 or more.
Yes, ma'am.
And is that because of the cost associated with?
Yeah, it's mainly due to costs associated with actually doing an actual study, Rita. So there's and this is recent over the last year a lot, because cost segregation is really hot, really big buzzword now.
Right, exactly.
Really hot right now. If I want to go get a lot of Instagram views and me be dancing, I would dance and then you say cost segregation and in the video and have views, right? But for the cost segregation, one of the biggest things, like for me personally, I've even went in and been like hardcore negotiating deals for me as someone who runs an accounting firm. And I'm like, man, I can sing a business, I can do whatever, just cut me a deal. I kind of go hustling a little bit. Even for me, it runs $4,000 to $5,000 for a good study. And so my biggest thing is I want that property, number one, I want that property to be worth doing a study for. And then number two, I want to make sure it's a property I'm not unloading anytime soon. And so, especially depending on where your property's at, those studies could rack up and get expensive. So it's more of a cost benefit analysis for me than anything else.
Okay. And do you recommend, because someone had mentioned to me, I attended my local RIA last week and they were saying that, you can even go online and there's forms that you can do your own cost segregation studies.
Yeah. I'm going to tell you right now, you're going to get what you're going to pay for. And I'm not even going to plug anybody. I don't even do them in house, but I will tell you straight up that you are going to get what you pay for when it comes to that. Okay. And so if you go do these like DIY ones, like for me, I want them to go in and I want them to even put down my light switches. I want them putting down my tile on my floor. I want them to notate everything, every single thing in there, and appreciate it properly and categorize it. Because
Mhm.
if I want to pay for it, I want it done right. I want a
Right.
real engineered study. You want a cost segregation engineer to do it, but if you're doing the DIY ones, they're okay. But I've never seen one that's like a do-it-yourself one where I've ever been like, man, that's really cool. Like I've never seen that.
But if you do
So
it yourself and then you decide that, hey, this didn't work the way, could you have it done professionally after?
yeah, and you gotta be careful too, Rita, because a lot of times the do-it-yourself ones, they won't do all the you call them change of accounting method forms that you
Hmm.
need on tax return. They won't do them correct. They won't even populate them. So those are things you got to be aware of on them. But you could go back and change it later on if you want to, but you don't have to do anything. I mean, that's something you could do at a later time.
Okay.
Yeah, but I'm a big fan of just do it right from the beginning for myself, and then you're good. So
I okay. Great.
yeah,
Thank you.
yeah, no, great question. Though I appreciate you watching that recording last week because I'm like, oh yeah, I did that is my rule. Good job, you paid attention to it. Because sometimes people are like, I thought you said million, and I'm like, no, like goodness gracious.
Half a
So
million. There you go.
half a million. And so that's it. That's where it usually starts for me to where I start entertaining it.
Hmm.
Oh, get
And then as we close, but I saw Sully just joined in. Miss Pitt, if there's any questions you want to ask before we depart, please feel free to come off mute. If not, you just want to be a fly on the wall, I'm happy to let you be that as well. So
any tax questions you ever had, you could ask any of them, and I'll try to answer them. You might stump me. Somebody stumped me the other day on something. They stumped me on some agriculture question, and I was like, "Come on, man! Did come on here as the agriculture specialist." So, but yes, Miss Pitt, if you got any questions, we're happy to help you out too. Just go and fly on the wallet. But
yeah, no, so which is all good. So what we'll do, like I said, I'm hoping this, I'm still learning the YouTube live thing. I forgot to record the actual Zoom itself. So I'm gonna lean on YouTube to replay this for me, and I'll edit it within YouTube, and we'll put that out there. I'll put the link for those who want to have a conversation with Ryan's team, a 60-minute free consultation for like I don't know, I don't know what else you could beat that, but take advantage of that for free. And we will set up something for the new year to really kind of get people going and get themselves set up properly, and hopefully not paying more than they have to their fair share
for
to the
sure.
IRS.
Hey, we're just here to help. So if people need it, let's I mean that's what we're both doing, Harold. So let's add value add to your community, and that's what we want to be here for.
Absolutely. So,
Oh,
oh, oh, really just came off mute.
No, I was just waiting for you guys to end so I could say thank you both very, very
oh,
much.
you're welcome.
Our pleasure.
Anytime.
Our pleasure.
Yeah. But yeah, well thank y'all for even having me. I mean, I enjoy this as much as anybody else, anybody who listens to it. So feel free to book that free consult, and then we'll circle back and do something also to help y'all out a little bit more too with the new year coming where everybody's freaking out about their taxes.
Will
So
do.
Exactly.
cool. Well, thank you.
All right.
Everything, Merry Christmas.
Merry Christmas to you all, and Happy New Year. But you now speak before the New Year's out.
For
So,
sure. Thank you,
Yes.
Harold.
all right. I appreciate you.
Thank you guys.
Bye, everybody.
Bye bye.